Hi, welcome to the Market Alert for Thursday, the 19th of May 2022. So a lot to get through today, starting off with UK inflation. Yesterday came out at 9%, forecast was 9.1%, 40-year high for cost of living. We know this is complete BS because food prices have increased some 30 to 40% in certain sectors during the last year. But then again, the UK doesn't have the food prices in their inflation numbers. If they did, it would be far higher. US saw the Dow drop 1,300 points yesterday. Stocks puke as Tina unwind accelerates. Stock and bond yields crater as the American consumer is strong narrative implodes. No, the credit cards are maxed out. US housing starts permits plunge in April as mortgage rates soar. The housing market is facing growing challenges. Again, futures slide after dismal target earnings plunging mortgage applications. And is this the housing crash starting? Well, it sounds like it, doesn't it? It will be a very painful few months ahead if this is the case. And again, diesel costs deliver body blow to trucking industry, impacting broader economy. I keep going on about this shortage of diesel and diesel increases. I'm sure it's going to make its way to the UK. It always seems to. High gasoline and diesel prices are here to stay. We are ripe for potential supply crisis. Again, you see, it's there again. And then trucking stocks massacred after Target warns of $1 billion in incremental freight costs. So again, you can see the impact. We've spoken about this before, the knock-on effect of increasing diesel costs to deliver food, the production of food, even down to tractor diesel right at the beginning of the process. So today's economic news, well, I don't think it's really going to matter because after what happened yesterday in the Dow, where it was down 1,375 points. I don't think they're really going to be paying much attention to any of this news apart to create a dead cat bounce. So we'll look at that in just a moment. Gold-silver ratio continues to fall on Tuesday, and yesterday, Wednesday, it's pulling back a bit. So again, we'll look at that in more detail and in context in just a moment. But starting off with the Dow, there you can see the market dropping down 1,375 points, I think it was, for yesterday. Let's just do a quick measure from there down to this low ballpark. There you go, 334. It's a bit more than that, but it gives you an indication there. So the Dow coming under intense pressure yesterday after the dead cat bounce. We had spoken about this as well. So the bounce is over, and the market, it depends whether the market's going to hold at this low. It's going to be really do its best to hold at 31,225. So keep an eye on this one. As I glance across to the other screen, there's a bit of weakness coming into the market. But if you look at the 30-minute chart of the Dow, you will see the prices have moved up quite well on the overnight. So let me just grab this, go down to the low and up to here. We've seen a 251 point rise in prices, so it's now coming off this and heading back towards the low. Overbought already. Let me just get rid of this. See a bit more on the screen. Overbought already, and you've got a crossover, and then we're going to switch to red, get through the close. 20 bar moving average. We've got the low, and then take out the low of yesterday. We head down to the low of the 31,225. And in the German DAX, I'll find the daily first. There we go. You can see that yesterday this also moving sharply to the downside. The market was down. Let's have a look at this one, just do a quick calculation. This was down 274, nearly 300 points for the Dow during yesterday's down move. Market finding a bit of support at the moment, which you'd expect as it's at the 50% retracement area there. It's actually at 38 at the moment, which I've removed, but it's got a chance of bouncing a bit there after the market is trying to attempt to close back above the 20 bar moving average there. When you get a really big down day like this, it's not unusual for the market to put in a straight reversal, but that's going to be a tough one today, I think, because of the reality kicking in that the Fed means business. the increasing costs, as we've just seen with diesel, etc. So the Fed have painted themselves into a corner. They need to increase a rate significantly higher than what they are, but by doing that, of course, it's causing a catastrophe in the rest of the markets. So I'm going to leave the fibs on the downside there and see what happens today. But you obviously, using the smaller time frames to determine the entry and exits. So there you can see the market moving down sharply yesterday. This was a good move to the downside. I'm still actually short overnight on this one, but the rest of yesterday's trades were great as well, or rather the last few days, which you can see here have been profitable, and the equity curve moving up nicely for the week. If you've not seen the video on the live trading examples of the first 3 months where the account has increased by 90%, I've got another one now because we're over that as well. You can see 21,000 starting balance of 10,000. So I need to just get and record that. But I thought I'd just throw these in each day as well so you can see what's going on. So yesterday afternoon, the market selling off sharply. I took the trade and I've held it and still have that at the moment. In the currencies, GBP, JPY hammered to the downside yesterday, but again also recovering slightly on the overnight. You'll see there the market trading back to 62%. We can get rid of this and this. We went through those. So 62 golden ratio is holding at the moment for the GBP, JPY. Let me just draw in the upside targets there as well. In the 30-minute chart, again, you can see we were moving to the downside. We became overbought there and then switching to red, and then the market moving down. We've got an increase in momentum here as we trade through the sideways bit, and the market then moving back to the upside there. In the pound, big down day, straight reversal off Tuesdays. Up move, reversing, but finding a bit of support there in the daily chart, and in the 30-minute chart you can see that bit of a move there. But yesterday overbought at the DP, supply and crossover, all the 50-20 bar moving average above the market, also creating resistance, and then prices continuing to move to the downside. About just under 100-point move to the downside for the pound. And then finally in the metals, not doing a lot this week, are they? But still looking bearish for silver as it tries to retrace in the daily through these retracements. I said before, I'm still looking at the $20 level. Just need the dollar to kick up and show some strength again, but at the moment it's not looking too healthy. What we need to see if for silver to go up is a loss of confidence in the dollar, but of course we're going to get another rate increase this next month. It'll probably be the last, to be honest with you. I can't see, if the market continues to sell off, whether they're going to be able to do it. Depends whether they want to keep the elite happy with their stock portfolios, but certainly it's a juggling act, and like I say, they really have shot themselves in the foot with this lot now by not taking action soon enough, trying to be all things to all men. So yeah, silver showing a bit of support there on the overnight. Let's have a look at the 30-minute chart. Trading down to the S1, the 200 MA in the 30-minute market bouncing off this. Like I say, I wouldn't be surprised if we don't get another down move on that. Gold also showing a bit of weakness still. 200 MA, the market stopped and is reversed. Again, I've got these downside targets for the gold price as well. The dollar we've looked at, and then Brent crude. We can see that the market is finding a bit of support there at the 5-bar moving average, and we're still in this channel for crude oil prices at the moment. Okay, that's it for this one. Bit of a whistle-stop tour of everything. But yeah, let's see what happens today. There's no major news, so the market's going to have to make its own mind up, which, like I say, it'll be interesting to see if it can maintain any assault back to the upside during today, or we continue to the downside. We may get a bounce first before we get a resumption at lunchtime with the Dow. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.